In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. So Mullen, before and foremost, has been a meme stock with more, I would say, utilities and legitimacy than some other ones. But it doesn't mean that Mullen is necessarily a blue chip stock or even a growth stock like other ones. Throughout its own history, um, I believe that Mullen has been able to ride the tail end of the gravy train from 2020 to 2022. And now, just like the rest of the market, it's in a new phase. It does have to prove to the market that it is going to be a relevant company, that it does have a purpose beyond the fact that people like to trade it. So, the reason why I said that it's a meme stock is because the interest from institutional buyers is quite limited for the moment. Like, essentially, it's a party where the only people who are going are the retails. And this does ask a few questions, because institutional buyers, not only do they tend to stay for the long term, but you can also see that they tend to stay even when things get rough, right? So for me, that is a huge layer of reliability and legitimacy for any sort of medium to long-term holdings. If I want to do this, of course. Personally, I didn't, but for those who want to do it, it's absolutely something to look for. I'm not saying that it's not worth holding for the long term just because not many institutionals are buying. I'm not saying that. I'm just saying that it would certainly help. And in fact, we can almost ask ourselves, like, where did you hear about Mullen? Did you really just read about it in some sort of magazine? Or did you see it on CNBC at the same level of, oh, I don't know, Neo, Lucid, and Rivian? Because if you haven't, then chances are you heard about it through like Reddit or other YouTube videos promising you that this stock could go up multiple times. So, did it do that? For a period of time, yes, it did. Right? There was a period of time when the stock went up multifold because it was so low that any sort of jump up could prop up your value of that position by like 300, 400, 500%. And that was the fundamental reason why Mullen was popular amongst a certain subsection of the traders. So once this is done, can it come back? Like, can this kind of opportunities come back for Mullen? Of course it could. Not to mention that there could be some short squeeze potentials for a stock like this. When the price level is that low, there's always the possibility for significantly more upsides than the downside. Because, I mean, to be honest, we're already in the penny stock territories. We are already in a situation where like institutional buyers are not coming in. So even if the stock, heaven forbids, gets delisted from the NASDAQ, is this going to be the end all be all for Mullen? I don't think so. Because the main consequence for a stock to get delisted from NASDAQ and to transfer from NASDAQ or any sort of public exchanges to the OTC market is that the institutional buyers could dump their position. But in this case, there's so little of it that it's not really a main factor to consider. So now that we're through this initial phase of interest, how is Mullen doing? No model has officially come out yet, and they're currently developing and researching. So the future will tell if they are successful in those operations. But it's suffice to say that they won't bring in operational cash flows anytime soon. I think that this stock will remain heavily speculated or heavily speculative in nature for the next few years, right? Because it's a very small company. They have to compete against fishes that already are bigger, much bigger than what it is. it has to go beyond the phase of just blueprints or PowerPoints. And in order to do that, they will need a lot more cash than what they currently have, which is something that a lot of people tend to be very sensitive about as well, which is their cash reserves. If they run low on cash reserves, they would have to dilute and further dilute and further dilute their existing shareholders base. We're not there yet, or at least I haven't heard any sort of upcoming dilutions, but if there are, it's certainly going to be frowned upon. So that is, I would say, the current situation with Mullen. It's a company that still has to prove itself to the market. It's a company that doesn't have a live product, but seems serious and determined to get one. It's also, by the way, a company with a pretty decent battery from where things stand. But of course, with those kinds of mumbo jumbos, I would say not to rely too much on them, because for people who are not within that industry, everything could look legit, right? As long as they look legit, we might think that this is the substance, but it's often not. So we definitely have to assume, or to, how can I say it, price in the fact that maybe there's not much of like substantial or scientific behind the veneer of the brand or the trademark. So this is something that we do have to deal with. This will certainly also impact whether you should, one, buy it, and two, for how much. So this is why I think that Mullen is almost on a category of its own as far as EV companies are concerned. Most EV companies are influenced at like 90% plus by the overall trends of the sector, or by like the overall trends from significant chunks of the market overall, especially everything that's a little bit speculative, everything that's a little bit like future oriented. But for Mullen, I would say that as long as it can prove its like relevance, as long as it can show to the market, demonstrate to the market that it can deliver what it promises, then it'll be able to stand against the test of the time. For now, I think that time might be limited or numbered for Mullen, and this is why we have to be careful with our decision. So, for which kind of investors is Mullen for? Mostly, in my opinion, it's mostly for short-term trading. If you want to go for something long-term, then it's extremely risky to buy Mullen, right? I understand that the downside is limited, but let's just say that the upsides or the future might also look very bleak if the company fails to demonstrate to investors that it is a serious company and not just some sort of scam or scheme to get money out from investors by presenting like wonderful presentations. Of course, they do have the battery. Let's not forget that they do have the battery technologies, but is that really enough? That's an excellent question to be asked. So, if things can go right, it could be a major payday. But this probability, in my opinion, is modest or low even. So if you want to buy Mullen, now is a good time to buy in, but you have to do it with a spare position, not with like a main portion of your portfolio. And speaking of your portfolio, it also has to be diversified enough to parry any sort of potential unrealized losses. Because there is a possibility that whatever wonderful promises that people either on Reddit or people online or Mullen itself has been telling you, they may not truly occur, right? It's a possibility. We have seen this time after time after time again, so it shouldn't be a surprise at this point that whatever wonderful thing that is promised, maybe it's not going to occur. So I would say that this is a position that you can buy with a very small percentage of your portfolio, around 1 to 3% top max, and it should maybe be traded over the next 3 to 6 months. 6 months even is a bit long. I would say it's from a few weeks to like 3 months maximum. And then beyond that, we definitely have to see if the company manages to convince us that it deserves to be taken more seriously. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect the investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up, or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.